Markets are so volatile because, again, there's just a lot of uncertainty about what these tariffs actually bring. Nobody really knows exactly the hardline stuff. And, the way I've heard it explained in other places is a lot of them, people are, there's so much uncertainty because the White House itself is still finalizing stuff, right? There's this idea that, maybe people are there's ongoing conversations between leaders of different countries. And so there's this kind of down to the wire feel to all of it, which has markets very uncertain. We've talked about how gold has been a winner in all of this and just continues to kind of float higher. I mean, this is, I don't even know, how many weeks in a row. If we take a look at the weekly chart, you've just had pretty much green weeks for the last couple years, really. I mean, the vast majority of weekly candles are green. Just a very, very strong upward trend for gold. Sitting at 31.18 an ounce, gold has been a big winner in all of this uncertainty, right? And if we think about why that might be, well, if you're somebody who, imagine you manage like billions of dollars on the behalf of a lot of different clients, right? Like you're a hedge fund manager. If that's your circumstance right now, and you say, look, there is no telling what the tariff news could bring, what do you do? Well, the answer for a lot of these fund managers, by the way, I just got to say, I love the stream layout. You guys, I didn't put that together. The producers behind the streams, the editors put together the stream layout. I think this yellow looks really cool. What do you guys think? I feel like the layout, the golden, yellow, black theme is pretty fun for the stream. Anyways, a winner in all this has been gold, because what a lot of fund managers, a lot of investors have done is they say, look, we don't know what happens next with tariffs and with stocks and all that. So let's stay in something that benefits from all this uncertainty, gold, right? Gold is just kind of like this. There's like the three prongs, I would say. There's like stocks, there's bonds, and then there's gold, right? And traditionally, when the U.S. is kind of on top, it's like you want to buy U.S. bonds, you want to buy U.S. stocks. But now a great beneficiary in all this uncertainty around the United States has been people selling their stocks, selling their bonds, and going for gold instead. Now, the thing is, what you have to understand is that that's nothing in markets is permanent. And there's this really dangerous thing that a lot of traders do, which is basically recency bias is a really common mistake people make in markets. For example, couple, like, I want to say maybe back around this area, November, December, I was on Twitter and I saw somebody make a comment that I'll probably never forget the rest of my trading career. Somebody made the comment, they were like, trading is really easy. All I have to do is wake up and buy the NASDAQ. And they were not being, they were not joking. I thought they were joking. I read further into their comments. They were serious. Like their strategy was the NASDAQ goes up all the time. So my strategy is just be long NASDAQ. And that was, that's a great theory when the chart looks like this. But this is what I mean by recency bias kills traders' accounts. Because what they do is they say, look, the NASDAQ just goes up every single day. So anybody with a brain, if you knew the NASDAQ was going to go up every single day, or falsely believed that it was going to go up every day, what would you do? If you knew the next 10 days were going to be up, you'd leverage everything on going up, right? But that's what people do. They falsely believe. They believe that there's a certainty that's just going to keep going up. People are going to do that with gold right now too. Nothing moves the same way forever. So if you had leveraged up to the top on the NASDAQ, this move would have killed you. That would have blown your account, right? But people do this over and over in markets, is they look at what's happening now and they assume that's going to be the case permanently. We launched the Edge Finder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the Edge Finder is producing now. The Edge Finder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name Edge Finder. So if you're not already using the Edge Finder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the Edge Finder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the Edge Finder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the Edge Finder at the super discounted prices. Thanks for watching. And now back to the show. So right now with gold, people are saying, look, gold goes up every single day. Why shouldn't I just leverage go long gold? It just goes up, right? But that is where people get themselves into a lot of trouble. So please be careful with things like gold. This is why trading is so hard. People think they can make an easy 15, 20% per month because gold goes up every day. And it's like when that shift happens, your account goes to zero. If you're leveraged up and you're trading irresponsibly. The only way to trade, it's a really simple thing that I say all the time. Trading, good profitable trading is a 1-2 combo. It is educated guesswork and risk management. That's it. Every profitable trader I've ever known, ever interviewed, ever been friends with, ever discussed with in my own trading, every person I've ever met who has been successful in markets does not speak with certainty about what the market is going to do. They don't know, right? There's no certainty. There's educated guesses, but there's no certainty. And they have small trades small size per trade. Every single one of them. I hope somebody just heard that and that clicked with them. If you are taking 5% risk on every trade, you're going to blow it. If you're risking 10% per trade, you're going to blow it faster. If you're risking small per trade, slow and steady is boring and frustrating, but it's what works, and it's what all the profitable traders say and do. Okay? Just be careful. Gold has been going up and up and up. I'm bullish on gold, but not at these levels. I've got to wait for a constructive pullback. 3,040 looks good. 3,000 on the dot looks pretty good. If I can get a pullback to there, and I can make an educated guess, as I just discussed, an educated guess that maybe gold continues its overall upward trend. Look, the pattern is up, right? I don't want to fight that. I'm not calling the top on this at all. But I also know that it won't go up forever, right? I think it probably will keep going up, but I don't know that for certain. Educated guess, risk management. Maybe I take an educated guess that if gold pulls back into this range, I can get a nice risk to reward, right? I could be wrong. It's an educated guess. It's not a certainty. An educated guess that gold could continue its rally from there. And if I'm wrong, what happens? Am I down 10% in my account? No, that's gambling. I risk a small amount, and let's say I'm down 0.5% in my account if this idea doesn't work out, right? I'm risking small. And if it works, let's say I make a really nice trade and I make 3% on the account. That's great. 3% should be a really nice return for you. If it's not, again, you have a capital problem, not a trading skill problem. That's where many people go wrong. I actually filmed a video yesterday about this very topic, about how many people think they have a skill issue with trading, when in reality they just have a position sizing and lack of capital problem. Anyways, just it's a time to be careful in markets, in my opinion, when it comes to these kinds of moves. Are very violent. You're seeing an elevated VIX. A lot of people get in a lot of trouble in elevated VIX territory, because most charts, when a VIX is high, most things follow through very sharply, and they go a lot longer than you think they will. So NASDAQ, if we get some news that the market does not like, meaning tariffs are sweeping and all-encompassing, and Trump really goes for the throat with this and really tries to make a stand against other countries, if that happens, the stock market is not going to like that. The stock market, if that is the case, if the worst fears are realized, and again, I think the market is pricing for worst case scenario. The reason I bring that up is that if that's correct, then yeah, I think there's going to be a continuation of this tumbling that we've seen in the stock market, right? But if you get anything less than worst case scenario, I think we likely bottom. So I'm still in the camp that I think the likely scenario, my quote unquote educated guess, as always, which could be wrong, my educated guess is that I think this whole kind of like surrounding the April 2nd big event, I think is a sell the rumor, buy the news type event. So what I mean by that is I think people have sold aggressively because they're like, we don't know what's coming with April 2nd. Here it comes. We will get some more context around tariffs this afternoon at 4 p.m. Eastern time. When that becomes clear, like once there is a solid known to a degree, if we get some finalization at all, I think the market will bounce. Simply because it's kind of like the worst fears. Once things are behind you, the market can grapple with it. The market hates having uncertainty ahead of it, if that makes sense. So I think what you want to look for on price action analysis here today for things like the NASDAQ and the S&P 500 would be signs of higher lows. Like if we can start breaking through yesterday's highs, put in some kind of constructive low, like if we see this type of move, if you see something like this beginning to form, I think your key levels here for like 4-hour chart traders on the NASDAQ, let's see if we can take out yesterday's high, or today's intraday high, I suppose. Today's big day. We've got countdown to the quote-unquote Liberation Day. I don't know if you heard my little joke, but I've been saying it. Is it Liberation Day or Liquidation Day? That is the question, and we will have to see when it comes to the market's reaction. What are your thoughts? I mean, we've had a lot of bearishness out there, right? The news media have been going, they've been going crazy with all this uncertainty. They've really put out a lot of fear, uncertainty, and doubt into the world. What do you think about this? Is this more likely to be a bottoming point for the market, or do you think this is just the beginning to the sell-off that we've seen?
I think it might, at the moment, it's a bit confusing. But Trump is going to speak, I think, later on today. I think from there, we're going to have clarity. But I think the market is already panicking. Yesterday, it was pushing up very nice. That shows the fear from traders or investors. So I think if maybe they continue with 25% tariffs, one way or another, that is going to affect the market in a negative way. It might be a short time, but I think we might see a sell. But from what we see now, it's like the market already tried to show us that support area, that it's actually valid. So maybe the market might touch that and continue going up, or maybe Trump might use a softer tone. Maybe that's what will help the market. But at the moment, it seems like things are going to melt at the moment.
Yeah, it's been well. Price action definitely has been rough the last few days. You can see, we had this big sell off, pulled back into this area, found resistance here, and have continued to push lower. My question though is, how much of this fear is already in the markets, and I guess what is the market positioned for? And what I think it's positioned for is it's positioned for the worst case scenario. What I mean by that is like sweeping tariffs and Trump's going to make a stand, and the market seems to be predicting that Trump is going to come out and he's going to swing the bat in all directions. That's what the market seems to be. So as you mentioned, if there is some softness that comes in, some considerations, some exemptions, some negotiations, some delays on tariffs, if the market sees that from Trump, I think there is a I should clarify, if the market sees any of that, even a little bit of that, I think that would be a bottoming potential for the market. But right now, as you mentioned, we're on a slippery slope, and the default seems to be sell now, ask questions later, at least until we get some more clarification around the tariffs.
Exactly. I think everyone at the moment is just thinking about bearish without any deeper understanding, because it's like, if you check the news, there is always breaking news. Trump is going to speak 25% tariffs, so that by itself, it creates this panic, even though there is nothing much to support that. So that's why we say maybe Trump might use a softer tone. I think that might change, because I think he already sees that it's not really good for the markets. And he might change. He might say, okay, we'll delay this and that, or we will have a deal with this country or this, whatever. And I think that might be a good thing. And it might happen. I think they are leaning to that direction, because this is not the first tariff. If you checked the previous one, they were all postponed for later date, or to do some investigation on that. I think even this one might be something like that. So yeah, I think we will see. We will just see. But if maybe it goes on that for a week or two, maybe we might see a slower sell-off. But still, even though we see the sell-off, it's still not really reflecting what we can see from the companies, because most of the companies were doing perfect. So I don't really see the reason behind that, why we see the sell-offs and stuff like that, especially on the indices.
Yeah, no, it's again, it's kind of detecting too. You mentioned like previous tariffs that have been imposed. There's been with each one some degree of like, for the most part, some degree of considerations and some exemptions and negotiation. So yeah, I mean, it also matters whether or not Trump is okay with, this is what I was talking about just before you joined the stream, is he okay with letting the market continuing to move lower, or is this getting his attention? That's the big question too. People are trying to figure out, is this enough of a sell-off to actually get the administration's attention, or is their pain threshold more? Could we see 5,200 on the SPX before concessions are considered, or some negotiations are made a little bit looser? That's I guess the big question, and why there's so much uncertainty out there is that people don't know, of course, how Trump's tone is going to be. That's why I think this afternoon the market has priced in such a big movement. We can see that in the VIX, for example. The VIX has spiked up here once again, showing that again market participants are pricing a big move in the markets, that they think that there's going to be a lot of volatility on most charts. So we'll see how that plays out. The other one I want to just show you too, we always like to incorporate some data into our discussion. The put to call ratio continues to be very elevated. This is just showing you that people have a huge demand for puts right now. They're buying bearish bets or puts on the market at a very aggressive rate. And the reason I bring that up is that typically, not always, but typically, when everybody rushes to buy puts get very expensive. And what happens most of the time is that there is some sort of reset or bounce off of that. It's actually, most of the time, puts and options actually expire worthless. Basically, they're priced higher than the actual moves that occur in the market. So right now, the market is forecasting a very big move. We'll see if we get a very big move. That's the question. There's been a fundamental bullish reasoning for gold. People have actually asked me that in the past. They say, Nick, how come you're never bearish on gold? And there are times to be bearish on gold, don't get me wrong. But in the last few years, I know we're speaking with a little bit of hindsight, like we know the chart has gone up. But as Kenzo, you pointed out, go back to our live streams in the past. They're all on YouTube. You can go back for 2 years, and we've just been bullish on gold because, again, the fundamental analysis continues to point towards gold looks solid. You've got inflation. For a while it was inflation cooling across the globe. That should be good for gold. Then it was, Russia and Ukraine going at it. That should keep, some level of elevated gold prices. And, now you have uncertainty with Trump. There's been a solid reason to stay bullish on gold for a very long time. And now we're still trading it, right? It's still a short-term trade. It's not necessarily, you couldn't be an investor in gold, of course, if that's something that you're believing in for the long term, by all means. But from a trader's perspective, I've just been only looking for long positions like you have, Kenzo, for quite some time, because again, the fundamentals have pointed towards that. And it's been hard to mess up the bullish idea if you have good risk management and patience for pullbacks. That doesn't mean it's going to go on forever, right? The trend could turn at some point, and it probably will. But timing that for the last few years has been famous last words for the bears, right? A lot of people have lost a lot of money trying to call the top on gold for the last few years.
Exactly. So yeah, I think mostly, if maybe for people who like technical, when it comes to gold, it's a different story. You might maybe use technicals on pairs, like maybe let's say currency pairs, which they also have their fundamentals. But on gold, I don't think technically you have to just use 5% of technical, because there is a reason why we still buy gold. It's not really about maybe whatever that it does, but it's a safe haven, not for only investors, also for countries. Countries like now, if I checked yesterday, I think they were saying Russia at the moment as we speak, they have gold reserves, like the first country to have that much, and they still buying. And even other countries are still doing that. So you can start to see that, that's the reason why we see gold going up. It's not really about us only, but there are different countries which are doing that. If things are not really going well, they also have to check do we have any reserve? Can we survive maybe coming 2 years or 3 years? So they have to think about that also. Even hedge funders, they also have something that they can actually call a safe haven. If things are not going very well, you have to hedge your funds. So you have to make sure that you also have maybe 10% of gold. And especially now, tariffs are going up and down. They might actually not work very well for stocks. If the stocks continue to sell, it means if you don't really have something like gold, you might actually lose seriously a lot. So it's actually something that you can hedge with, or we can just call it a safe haven asset.
Yeah, and it's just something else to point out is institutional money has been long gold this whole time too, Kenzo. We've talked about that many times on the show, but over the last few years, gold has continued to be so you're pointing out, rightfully so, that countries are accumulating gold for reserve status to protect themselves from potentially a fallout in the dollar and just all the chaos that's going on in the world. Institutions have been accumulating gold over time. And Alan asked the question, why is gold shorting so popular? Same reason for the NASDAQ. People, I don't know exactly why, but there's always people who think that gold has just run too far, that it's overbought, that it's gone in one direction too far. And I don't necessarily think that's exclusive to gold. I think people just like to do this with charts. They like to think, I'm going to call reversals. Everybody likes to call reversals, and gold just happens to be in recent years, one of the charts that has had some of the most extreme moves. So people are trying to bet against those big moves. So same thing with the NASDAQ. You know, when the NASDAQ's up and away, people typically trying to call a top on that one too. It's just a fascination, I think, that a lot of traders have. And the gotcha in all of it is that institutional money has just been buying into the upward move, right? People think, oh, institutions buy low and sell high. Well, not always. Sometimes they just buy high and continue to hold it as it goes higher and higher and higher. So tracking institutional money is something I highly recommend people keep an eye on.
I've got some information here regarding tariffs if anyone is interested. I'm not going to read this whole thing, but feel free to pause and read it or screenshot it. But the broad-based scenarios is quite important. So you should take a mental note of this and obviously pay attention to what Trump says. So 10% tariff, assuming a blanket 10% tariff that also cancels or replaces Canada, Mexico tariffs, but not China, S&P or the SPX is likely to gain 2 to 2.5%. 10-year yields higher by roughly 10 basis points. Euro dollar falls to 106 to 107, currently around 108. 25% tariffs, S&P or the SPX declines 1.25 to 1.75%. 10-year yields fall 12 to 14 basis points. Euro dollar falling to 103 to 105. As the US dollar behaves as a safe haven. 35% tariffs, S&P or the SPX declines to 2 to 3%. 10-year yields fall 20 basis points and euro dollar can fall to 101 to 103. So this is from JP Morgan, by the way, if anyone's curious. So keep that in mind. Just pay attention to what is going on because it will be possibly quite impactful, or it could be a whole nothing burger, but I'd rather be prepared for something that's not going to happen than unprepared for something that does happen. So gold bears must be on lower time frames. Yeah, gold shorts for me are just not the play. I'm quite exposed actually going into this week. It's not just tariff news. We've also got US news. So we've got the unemployment rate, we've got NFP. I think we've got Powell speaking on Friday as well. I think, maybe. So I've got a DAX short, we called this morning, still in silver longs. It's just not really doing too much. It's pretty sideways. Still in the long position on Google. This is more of a long-term play, so I'm not too concerned about that. Australian dollar New Zealand has been a bit of a painful one. So this market's very, very sideways. It's not a market that I particularly like to trade, but if the fundamentals are there, I will take it. So yeah, it's done its typical behavior of just consolidating and drawdown. Now we're in a very, very small amount of profit here, but I'm happy to hold this one through tariffs as well, but that could be a mistake, but that's my personal preference. Eurodollar shorts, I've actually scaled into Eurodollar shorts, which I can show you here. So we had a really, really strong entry on Eurodollar. Let me just turn on the trading history. Yeah. So yeah, we took a short right at the top here, which was great. And I've just been day trading, scalping it down, play some more shorts here. And I've got to take profits at 1.03, just, just in case we see some craziness, some crazy moves happen. At least then, I can get out a decent price. But we'll see. I'm not really expecting too much, but yeah, it's just there for some safety. We've got the long position on the S&P. This is still a one-to-one trade. So if the S&P moves 1%, the trade is 1% as well. But again, it's more of a long-term position, so I've not really got any short-term concerns about that. The dollar-yen trade has also been a bit of a painful trade because it's just range-bound sideways, and now we are seeing a pullback to the downside. Whether this will last, I don't know. Again, tariffs could completely throw this off, but technically it still looks fine. Fundamentally, I'm still bullish on the yen, and I'm still long-term bearish on the dollar. So I still like the idea of this trade. So quite happy to sit in all these positions and just see what happens. Yeah, it's not heavy. Yeah, it's not an FOMC or anything like that, but it's still, still useful to pay attention to what's going on. So regardless, lower dollar. Yeah, we are seeing a lower dollar actually into today, but I would expect the dollar to start gaining value tonight as we go into the Trump speech. I think it's around 9 p.m. UK time, so it's quite late, but what can we do? I did email Trump and ask him to do it a bit earlier, but he told me to F off, which I thought was a bit rude. ADP had a good result. I think it can influence gold a little bit. Forex God tier, probably not. ADP is not a big deal, to be honest with you. It can be used as a little bit of an indicator for NFP, but it's not very accurate, and it shouldn't really be used like that. So, yeah, wouldn't really be paying attention. Yeah, it came out at 155, so it did overshoot quite nicely. But I mean, you know, if you're saying ADP affects the market, why is the dollar down and ADP overshot? But yeah. There's no chance of the dollar rising. Yeah, I did say that. I said I would expect the dollar to rise off the tariff news tonight, but it does depend on context. So I'm saying that more as a blanket statement based on what I expect, but that could very well be different to what actually happens. So I would expect the dollar to rise. By how much, I've got no idea. But then long term, so when I say long term, I mean sort of the rest of the year, I don't really have much hope for the dollar. But again, we will see. It's anything can happen. I'm thinking the dollar could follow 10-year lower. Yeah, that's also not out of the question. I'm not in a position to be trying to make any predictions right now, to be honest with you. I'm quite happy to just sit in what I'm in, and if it stop losses are hit, it's what it is. If we have profit, it is what it is. It's part of trading, really. Did you recap Aussie New Zealand? I touched on it, but I didn't really go into it. But yeah, I think the fundamentals for Aussie New Zealand are completely fine. Let me just see if I've got research for this one on hand. I do. So this is a slight plug, but it is free, so don't worry. If you go onto the Elite Traders website, go on Global Research, click on the most recent one, and this is all economic research that we put together every week, and it's completely free. So if we go into trade ideas, you can see we are getting signaled into a short Aussie New Zealand, and the economic reasoning is the Reserve Bank of New Zealand remains the most hawkish central bank in the G10, maintaining a restrictive policy with no immediate plans to cut rates. In contrast, the Reserve Bank of Australia has already initiated rate cuts amid election-driven fiscal expansion and disinflation. This divergence in policy outlook and fiscal risks favors New Zealand outperformance versus the Australian dollar. But, and the big but, is we did get the rate decision by the RBA, and they held rates at 4.1, and it didn't sound very dovish. So this trade is not as strong as it was, but it's still reasonable, which, I might cut it early, but yeah, we'll see. I'm just going to wait and see how it develops. ECB's turned hawkish. Yeah. Well, this is the thing. I'll be honest. I've been very transparent about this the past week, 2 weeks. I'm a little bit clouded when it comes to the currency markets. I'm a little bit on edge isn't the right word, but I guess uncertain is probably the right word. But it's clearly reflected in the markets. I don't think it's just a me thing. If you look at the VIX is rising as well. So I'm not looking really to be in any positions for too long. These are, I'll be likely cutting them at 1.5% gain, which is exactly what I did last month, and it worked out very, very well. Just reducing targets, taking what I can get.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.